the component of real GDP for the advanced economy. The average between 2013 and 2003 and 2012 is 1.6 for private consumer expenditure, which means that the average percentage it increased is only 1.6, and the stock bidding is 0, and the foreign balance is 0.2. So foreign balance it's referred to the trade deficit or trade surplus. So if the number is in positive, the country have trade surplus, and if the number is negative, the country is trade deficit. So we can look at 2020. Everything is in negative, only public consumption, because even though we are hit by the pandemic, people still need to consume. That is why even though it dropped, but it will not go into negative. Next slide, please. And this is the emerging market and developing country real GDP. So we can look the other area beside Europe, beside advanced economy, it's fine, but except Latin America and the Caribbean. In 2016, it got recession in the lowest 30 years. IMF report that it got a recession, like it is the lowest in 30 years time. And in the Caribbean, it got hit the most by COVID-19, even though the death toll is not that much, but you know that Brazil, a lot of people died, more than 200,000 people, and the economy at Latin America hit harder than developing Asian country and other developing Europe country, because even though our economy hit, the government they have like they can contain the situation and still have the right policy to continue to provide for their own people. Next slide, please. And this one is the inflation of the world. So the inflation average is 1.5 throughout the whole year. However, look at Japan case. In 2013, it is not inflate, but the inflation turned to deflation for minus 0.4%. And the Bank of Japan, they have many measures to tackle this. And also in 2017, they once again with deflation, and the Bank of Japan they also have a new measure to target it, because at that time I think Japan their money supply is less. That's why it have deflation like that. Next slide, please. And this is the consumer prices for the advanced economy. So as you can see that in 2020, even though the world is hit by COVID-19 pandemic, some countries their consumer prices still increase. However, some countries in Asia like Taiwan and Singapore, the consumer price it is not increased, but it deflated. Like look at the case of Taiwan, it's minus 0.2%, 0.2%, and Israel, you can see that it's minus 0.6%. Next slide, please. This one is hard to see because when I cut it, it's not looking good. So this one is the emerging market and developing economy for consumer prices. So as you can see, from 2003 to 2012, the average for the emerging and developing Asia is 4.8. For emerging and developing Europe is 8.8. and the rest is around 5.4 and 7.9. The highest one is from Sub-Sahara African is 9.2. So which means that the consumer price it increased year by year. But you can see that in 2020, even though COVID-19 pandemic hit, the consumer prices still increased, and this time it's 10%. You can see at the sub-Saharan African it's 10.8%, and the Middle East and Central Asia is 10.2%, which means that the prices increase immensely. Next slide. So that is the end of my point. I would like to give the floor to my next presenter.
So once again, this part we come to the financial policy. We discuss the government fiscal balance and debt of the United States from the year 2003 to 2022. I only highlighted the net lending, net borrowing, and cross debt as I think these key points are important for our study. Before we dig down detail, I'd like to define the key term government fiscal balance and debt. So the government fiscal balance here is referred to the government budget balance between its revenue and its expenditure. The government revenue could be in the form of tax, such as income tax, corporation tax, asset, and other revenues, while the government expenditure, it includes subsidy, property income, and other capital expenditures. So it has to balance. If the government fiscal balance, if the balance is positive, the government has the fiscal surplus, meaning it spends less than it receives, so the revenue is higher than its expenditure. However, if the balance is negative, the government has a fiscal deficit, meaning it spends more than it receives, so expenditure is higher than revenue. And the key term debt is it refers to the amount of money to be paid. So in this table, it shows the fiscal balance and debt of the United States measured in the percent of GDP for the last 19-year periods. And the net lending and net borrowing, it reflects the amount of the financial assets that are available for lending or borrowing to finance other expenditures. So net lending, I put surplus, meaning the government could provide the financial resources to the other sector, while net borrowing, I put minus, meaning the government need more financial resources from other sectors. So in this table, the net lending and net borrowing in the United States from the year 2003 to 2022 are all negative balance. The negative balance that I mentioned, it's shown as a net borrowing, which implies that the United States expenditure is higher than the savings, so the government need money to borrow in order to finance other expenditures. So in 2003 to 2012, the net borrowing was minus 6.6%, and it fluctuated from 2013 to 2020. And in 2021, in 2020, the highest net borrowing was minus 15.8%. And 2021 and 2022 is the projection years by IMF. Another key point that I want to highlight is the gross debt. Gross debt here refers to the total amount of debt to be paid. It could be either in long-term or short-term debt. So the gross debt in the United States from 2003 to 2012 was 77.8%, and it kept increasing from 2013 to 2020. In 2021, the highest gross debt was 132.8%, and in 2022, it declined to only 104.6%. So that is all for the financial policy part. I would like to hand the floor to the next team member.
Okay, thank you. So next, moving on to the foreign trade. So here's the table of the summary of the world trade volume and the price. So in this table, I mean not this table, but in this point, we focus on the two main points, which is about the trade in goods and services, and another point is about the trade in goods. So first, let's take a look at the trade in goods and the services. So in this main point, there are three main sub main point that we're going to that I'm going to give more idea on that part. So the first one is about the world trade. So the average world trade volume between 2003 until 2012 was around 5.6, and the average between of the world trade volume between 2013 until 2012 and until 2022 was around 2.8, which means that the average was decreased if we compare to between these two periods. And next point is about the price deflator in the US dollar and also the price deflator in the SDR. So what is the price deflator? So price deflator, it can be the measurement of the change in price for all goods and services that the economy can produce. And the price deflator can also calculate by by taking the nominal GDP divided by the real GDP multiplied by 100. So we can, by using this method, we can calculate the price deflator in terms of GDP. And so take a look at the table. So the average price deflator between 2003 until 2012 was around 5.1, and the average price deflator in the US dollar between 2013 until 2022 was around minus 0.8%. So to me, based on my understanding, what it means 5.1, it means that it is the change in price that the economy of one country can produce. Yes, that based on what I understand on this context. And so moving on to the price deflator in SDR. So for your information, SDR, the full form is the special drawing right, and it means and it is an international reserve asset created by the IMF in 1969 to supplement its member country official reserve. So so let's take a look at the table. So the average price deflator in the SDR between 2003 until 2012 was around 3.3, and another period was minus 0.3. So in that case, I'm not really sure what it really means, but this is just the data that shown by the IMF. So moving on to the second sub-main point was about the volume of trade in the export in terms of export. So the average of the export in the advanced economy was around 4.5 in between 2003 until 2012, and the another period was around 2.6. And while the average volume of the export in the emerging market and also the developing economy was around 8.3, and another period was around 3.1. So in that case, we can see that the export of the let's say developing country was higher than the advanced economy. And for the import, the import, we can also see that the developing country also import more or import higher than the advanced economy. And moving on to another main point was about the term of trade. So what is term of trade? So term of trade represents the ratio between a country export price and its import price. So so the average of the average of term of trade in advanced economy was around minus 0.4, and another period was around 0.5, and in the emerging market and developing economy was around 1.6, and another period was around minus 0.6. So in that case, what it means by the minus, I'm not really sure, but the positive one, let's say the 0.5, based on my understanding, it would means that the country need to export half of the product in order to purchase or to import the product from the outside. So this is based on the term and also based on what I understand. Yes, I think that all for the first main point, the trade in goods and services. Moving on to the trade in goods, which is the second. Can just move to the next slide. Yeah, next slide. Yes. So the second main point, I don't think there's different much if we compare to the first main point, but it just add on the fuel exporter and non-fuel exporter. So so let's just take a look at the volume of trade in the emerging market and developing country, they also mentioned another 2 points, which is about the fuel exporter and non-fuel exporter. And if we take a look at the table, we can see that the non-fuel exporter is, the volume is higher than the fuel exporter. So basically, what I can understand from this part, it just shows us the export and import, the volume, and also the price that mentioned, like the price deflators and stuff like that. So I think that would be it from my part, and I would like to hand the floor to my next presenter. Thank you.
Hello everyone. So this part is talk about the current account transaction. So in table A10 it summarize of the current account balance, and we can see that for the advanced economy country, for the current account balance in 2020, it has 155.8 per billion US dollar, and we can see that the United States has is always negative current account, because it is because the United States has import over export, and also like the United Kingdom and Canada, they are also has a negative current account. And for the emerging market and development economy, in they have some year they have positive current account, and for the 2020, that the year that hit by COVID-19, they have the positive current account that the number is 196.2 billion of US dollar, and we can see that for the current account of the world, it has in positive current account that account for in 2020 it account for 321.9 billion US dollar, but for the in Middle East and North America and the low income developing country, they have a negative current account balance in 2020. And the next slide is the current account balance in the percent of the GDP, and we can see that in the for the advanced economy country, in average, the current account balance is 0.3%. But for the United States, United Kingdom, and Canada, they are always in negative current account. And for the world, it account for 0.4, and only in the Middle East and North America and the low-income country has a negative account, unlike the European and emerging market in and middle-income country that has a positive current account balance. And this is the current account in percentage of GDP in emerging market and developing economy in the area like in the area like in Asia, in developing country in Asia and in Europe and Latin America and Caribbean, they have a positive current account. But for the Middle East and Central Asia and Sub-Saharan Africa, they have a negative current account, especially in 2020, that the year that hit by COVID-19. And the next slide is the current. We look at the current account balance in the person of export of goods and service. And we in this slide we can see that the United States and United Kingdom and Canada, they always has the negative current account because their country in their country the export is less than the import, and unlike the Euro area or Japan or in other advanced economy that they has export more than import, that made the current account is positive. And we can see in the for the world, the export of goods and service in 2020 are 1.7%, and but for the Middle East and North America and low-income developing country has a negative in 2020. So that's all from my part. So move to the next presenter.
So thank you. So next part is about the balance of payment and external financing. So the balance of payment is referred to the difference in total value between the payment into and out of the country over a period. And the external financing is the phrase used to describe the fund that firm obtained from the outsider. So as we see in the table, A13 is the summary of the financial account balance. So in this table, it has been like describe the sum of the financial account balance, and that's equal to the sum of the investment, which include the net direct investment, net portfolio investment, net financial derivative, and net other investment, and last but not least, the check in VY. So it was the data have been shown from the 2013 to the 2020 and the projection of the 2021 and 2022. So from this data, it has been categorized into the advanced economic, the regional group, the analytical group, and last but not least to the world. So for the advanced economic, they have been include the some of the advanced country like the United States, Euro Asia, the Germany, France. Move on to the next slide. So it include the Japan, United Kingdom, Canada, and it also include the other advanced economy and the emerging market and developing economy. So move on to the next slide. So next slide is about the regional group. So it have the emerging and developing Asia, emerging and developing Europe, Latin American and Caribbean, Middle East and Central ASEAN, and the Sub-Saharan Africa. So move on to the next slide. So it's the analytical group. So it have a divide into the source of export earning and the external financial group. And last but not least, they have been mentioned the financial account balance of the world. That was in showing the projection of the 2021 and 2022. So basically this slide on this part, the summary of financial account balance is showing the balance of the payment. So it the sum of the external financing, which include, like I have been mentioned, the direct investment and the other investment, with all of the sum of the aggregate is equal the sum of the financial account balance. So as we can see that some of the country like it have the negative, and some country have the positive data. So the positive capital and the financial account is mean that the country has like more debit than the credit, making in the net debtor to the world, and the negative is like refer to the account that make the country a net creditor. So in contrast, if the country that deal with the balance of the payment like it deficit or the binding external financing, the adjustment policy is being implied in this country. And to be notable that the estimate in this table are based on the individual country national account and the balance of the payment statistic. And for the country group that composite that are calculated as the sum of the US dollar value for the relevant individual country. So some of the group aggregate for the financial derivative are not shown because of the incomplete data. So for example, like in the first slide that the euro area have missing the data because of their projection for this country are not available because of some of the data constraint. So I would like to go to give the floor to the next presenter. Thank you.
So in this part, I will talk about the flow of funds. First, we have to know what is the flow of funds. The flow of funds are financial accounts that are used to track the net inflows and outflow of money to and from various sectors of a national economy. And macroeconomy data from flow of funds are collected and analyzed by a country's central bank. As you can see in the slide, this is summary of net lending and net borrowing. Net lending is the net amount of a unit or a sector have available to finance directly or indirectly to other unit or other sector. And net borrowing is the net amount that the government have borrowed from other. And in this slide, there is a study from advanced economy and emerging market and developing country. The advanced economy include United States and Euro nations such as Germany, France, Italy, Spain, Japan from Asia, the UK, and Canada. And each category consists of net lending and net borrowing, their current account balance in which saving and investment also mentioned, and lastly, their capital account balance. The current account balance is an important indicator of an economy health. It is defined as the sum of balance of trade, net income from abroad, and net current transfer, where the capital account balance represents the balance of payment for a country. The capital account keeps track of the net change in a nation asset and liability during the year. And the capital account balance will inform the economist whether the country is a net importer or net exporter of the capital, and this estimated data of the gross national saving and investment are from individual country national account statistic, and also the estimate of the current account balance, the capital account balance, and the financial account balance are from the balance of payment statistic. The current account balance is equal to saving minus investment, while the net lending and net borrowing is calculated with the sum of the current account balance and the capital account balance. And the data in this slide is only accurate with the advanced economy, so we don't need to look at the emerging market country. Next slide, please. Next again. Next slide, please. To the summary of world medium. Yes, in this slide, we have the world real GDP, which means that it is an overall monetary value of all finished goods and services made by all the countries. And the referential number of the world trade by three compartments include import, export, and the term of trade. The term of trade are a key economic metric of a company have measured through what its import and export. And the term of trade is determined by dividing the price of the export by the price of the import and multiply the number by 100. And moreover, the world manufacture have decreased over time, and it has started it descent positive of 2% in 2021, and it will be decreased to 0.7 in 2022. And the interest rate keep on negatively decline both real 6-month and long term, which let the consumer pay at lower rate. And the the current account balance of the advanced economy always increase annually with 0.3 in 2020 and 0.2 in 2021 and keep on increasing. Not quite different from the advanced economy, the emerging market also keep on increasing too, but on the projection between 2023 to 2026, the current account balance tends to be negative with minus 0.2, and the total external debt and debt service also being mentioned here also. And next slide, and this is all for our presentation.
Okay, thank you, the group, for making the presentation. This is the presentation about the numbers, so we see only many numbers, okay, appearing. Just a quick note, okay. I heard in your presentation you sometimes you talk about this number and that number, and when listening, if I'm glad I cannot catch it. So when making presentation, for example, can you show the one table? Okay. Yes. For example, if you likely to talk about any, I think you can highlight. You can try to put some color or whatever on this part. So and then you can draw this way. You can draw the listener. I mean, the audience toward the point that you want to say. I don't think you talk all the number here, okay? But you may talk a few number, and then the thing that you want to mention, you should actually put, let's say, cycle or whatever. So when we listen, we can easily, okay, get the point, okay? Because otherwise there are a lot of number and mess up in the table. But anyway, I can follow what you talk. I keep listening, okay? Next, I have just a few quick question and note. Okay, first go to Adam. It's not a question. It's likely you talk about Japan in deflations, and you try to give some explanation about Japan for the case of deflation. Just want to add, okay, that it's true that Japan did have deflation during that period. And one of the concern during that period is that, as I told you, I answered the question in the class, when a country having deflations, one of the concern is that product that sell on the market is becoming cheaper. And from the point of view of the investor, the seller, producer, they would feel that, why would you sell good and the good that you are selling is decreasing in price? So you don't want to do any investment. You don't want to produce anything. And there's a lot of investment flowing out of Japan and leading to loss of job in the countries, increasing unemployment in the countries. During that period, the government of Japan tried to lower interest rate to provide more loan. Okay, it's very difficult. So as I said, having deflation is not a good thing. Okay, but having too high inflation is also not a good thing. So some moderate inflation is acceptable. Okay. The next thing I have is going to Sumtay. I saw Sumtay actually present about something like gross debt. Okay, about debt for the countries. Can you go to that part? And can you move to Sumtay part on debt? Panyarat, are you there? Yes, that slide. So for example, we can see the case of US. By the year 2020, the gross debt was about 127% of the GDP. So we always talk the debt as percentage of GDP. So Sumtay, can you explain why do we need to compare the size of debt related to the GDP? What does it tell us?
So I think it tells about the amount of debt that a country need to pay.
So tell me what is GDP and what is the debt?
GDP is the total value of the good produced in the specific time in the country, and the gross debt is the total amount of debt that the government need to be paid. It could be either long term or short term.
Right, okay. So generally when we talk about debt, we always comparing to the ability to pay. And generally when we think of a country, the ability to pay is better to measure by how much income that a country can generate. Okay, so when you talk income that country can generate is the GDP, okay? Because GDP measure the total income that a nation or country can generate during a given year. So when you compare the gross debt, the size of debt you have to pay back with regarding to how much your economy can generate during a given year, it can tell you whether your ability to pay is going to have difficulty or not, okay? So that's why in the report when people talk about debt, even our government the same, okay? They do take the size of this debt comparing to the GDP. And in our country is around about, I think, maybe 25 or 30% comparing to the GDP. The meaning is that for every $100 you generate from the GDP, because your business doing well, people in your country have income, for every $100 you have to pay back around $30 is the debt you have to pay. Okay, so that's why when you see the information about debt, you always link to the GDP as a ratio, just like in the table. And moreover, if during several years the debt keep growing bigger and bigger comparing to GDP, that's a signification, a signaling that your economy is going to have problem like Greg's. Okay, maybe you cannot pay back. Okay, thank you for that, trying to answer the questions. I like to go to Ling An. It's a very interesting part, and I have a question for him. I saw you talk about volume, okay, volume, and then you talk about the players. So see in this table, we can see in terms of volume. So from year to year, okay, this is an average change, percentage change annually. So from yearly to year on average, from 2003 to 12 to 2012. When we talk about volume, the volume here means export plus import. Okay, when we talk about trade volume, we talk about you take the total value of export plus import. And then when you calculate the change from one year to the next year, you can get percentage change. And that's what the table is about. So 5.6% is the average change. So on average, over this period of year from 03 to the year 2012, the volume of trade increasing on average about 5.6% per year. Okay, but my question is, what is the difference between volume and why do you see here? If we talk about volume, it increased about 5.6% per year. Okay, totally export import together. But when we measure in the flatter, it's only 5.1%. So there is volume. There is something that you make adjustment after taking out about price. So can you explain to me what exactly is volume and what exactly is you adjust for the price?
Yes, thank you, Lex. Based on my understanding, like you mentioned, volume is the import plus export, but price deflator, it can be include the inflation in that as well. So when we calculate with the inflation, there is also some adjustment in the price and stuff like that. So when we combine and the calculate, so it might be drop down or might be go up, something like that. But I'm not quite sure. So
yeah, okay, but okay. So let's say let's say my country, okay. Let's say I export motorbike, okay. I export 2 motorbikes, okay, to let's say to Vietnam, and one motorbike is 1,000. What is the volume of my export to Vietnam?
or two or one, teacher?
2 motorbike, okay.
Two,
One motorbike is price is 1,000.
Okay. So the volume might be 2,000, right?
So how do you get 2,000?
Just multiply with 2.
You take the quantity, right? 2.
Yes.
Multiplied by the price, right?
Yes, yes.
So tell me then, if so, let's say the next year I see that this value increase. Okay, let's say go to 3,000. Can you tell me the fact that it increased in this volume? Okay, is it coming because I produce more motorbike and export, or because the motorbike that I export become expensive?
About the inflation or about the tax?
I mean the volume. Okay, the volume.
Because of the price of the product increase.
For the volume, we cannot say anything. Okay, we cannot say anything. Right? Perhaps we export the same too,
Yes.
but the motorbike become expensive. Okay. Or perhaps they produce 3 motorbike, but the price actually go down. It's only 500. Okay. So we don't know. We cannot say. So when we talk about volume in here, we only talk about quantity and price. Okay. It may increase together or maybe the other way around. But by the end of the day, we see it's increase in value. But when we talk about deflated, we try to take out the price. So when we talk about deflated, we are the fact that the export to Vietnam increase is coming because we produce more motorbike, because our capacity to produce more motorbike. It's not because the price motorbike become expensive. That's why we have a deflated. Okay.
Yes.
So that is the difference. Okay.
Yes. Yes.
The other thing. Okay, I saw you explain about the term of trade. That's okay. Okay, term of trade. Minus and plus here because we are talking about percentage change of the term of trade. You take the term of trade this year, you compare it to the term of trade previous year, then you can know whether it's plus or minus because you calculate the percentage change. Okay. An explanation, I think you already explained. Okay, 0.5 meaning what it means. Okay.
Yes.
And for Tida, okay, Tida, can you go to Tida part? The last question is for the group is for Tida part. So you see a lot of in the financial account we have direct investment, something like that, okay, and portfolio. Just a clarification, okay. When we found a number is minus, does it mean that the foreign direct investment go in more into the country than it go out? Or it just mean that the investment, direct investment go into the country is less than the direct investment go out of the countries? Can you clarify that number about plus and minus, Tina?
So for the positive, the plus is the mean that the country have more debit than the credit. Yes, and it's a debtor to the world, while the negative, the minus sign is like the country have a net creditor.
No, okay. What we mean by here is that, let's say, for example, looking at the United States, okay? So we see in the year 2020, the direct investment net is minus 53.5, and the unit here is billion. So what's the meaning of minus? It means that when we take the direct investment that flow in, okay, into the, I mean that flow out of the US, and we minus the direct investment that flow in into the US, we get a minus sign. And that minus sign means the US receive more, okay, domestic, I mean investment into its country than it go out. So for country like you see some country like Germany, okay, they have direct investment at 29.3 in year 2020. It means investment in of the Germany, direct investment go out of Germany to other country, the rest of the world. Then it's direct investment that go into Germany. Okay, that's why you have a plus. Okay, the plus and minus, it have its own meaning. Just a quick clarification and also for the listener. Okay. to see this what. So each country have different situation. Okay, that's all. I think I like to go to your discussion questions. Can you show the discussion question? Okay, so this is the question for today. Can you describe trade investment in Cambodia during COVID-19? I don't know what describe mean, okay? It could be, but maybe you can. And what can you prepare to boost trade investment in the post-COVID areas? We know that trade investment are affected, okay? So what would be your suggestion? So would you have any keyword or question for the group? Please ask them so they can clarify before we go for the discussions. I think no, right? Because the word is so easy. So I like to put you into 5 rooms, and I will bring our presenter to support you. So please wait a minute, because I try to get the presenter into each room. Okay, so in room 1 we have Thida there and Sumtay. Room 2 we have Udom. Okay, and in room 3 we have let me see who is there. We don't have anybody, so I'm going to get Sumtay to room 3 so she can support the discussion. Okay, room 3. Okay, moving to room 4. Room 4 we have Panyarod there, it's okay. And room 5 I have Liang An there. Okay, so we can start the discussion now. You have 10 minutes for discussion. So let me open the room and let's start. Yes, Nita, any problem?
Yes, Lecture, I was disconnected. Please.
Okay, I will get into the room. Or you can join into the room. Please wait. Okay, hello back everyone. Sorry to bring you back to the room, the main room. So next I'd like to invite each room for sharing your discussion. So let's begin with room 1. We have Satyanit, Tida, Morakot, Chandanit, Sunhu, and Benjamin, please.
Can you hear me?
Yes, I can hear you.
So, to describe the trade and investment in Cambodia during the COVID-19, our group have discussed and come up with this answer. As Cambodia is experiencing a resurgence of COVID-19 case, which has slowed the recovering, especially the service contractions and the real estate sectors. So, in order to boost those trade investment, it needs to requires to have the further entrepreneurships expanding the use of technology and building new skill to address the labor market needs. So accountable and responsive public institution will also be critical. So the quality of human capital will be the important factor to achieve when it's for Cambodia to reach the medium income status by 2030. So during COVID-19, also during COVID-19, it has seemed that the economy in Cambodia tends to downturns, uh, especially the agriculture performance that is increased in Cambodia export goods more than 7 billions and raising nearly 3%. And so for the next questions, how can we prepare to both trade and investment in the post-COVID area? So for the recovering for investments, it needs to it's providing the it has the direct capital injections through investment loans, to invest through investment loan and loan. Also, it ingesting in it and it adjusts things capital into the banking systems to investment, and also it have increasing activities through public-private partnerships structure and attracting income foreign direct investment and uh, the streaming the loss of outgoing foreign investments. So the investment is tends to be low during the COVID-19. However, after the COVID-19, we can see that however, during the post-COVID-19, we can see that a lot of country tends to come and invest again in our country. And for the the sector regarding to the trade and staff, we can see that even during the COVID-19 and past COVID area, we can see that trade is still working well, but the fact that the investment tends to have up and downs. So that is all about our part. Yes.
Okay, thank you, Danit, for sharing your discussion from room 1. Let me invite room 2. We have Tony, Senasa, Wanmani, Udom, Kanita, and Suwat. Please.
So good evening, lecturers and classmates. So I am from group 2. So for the first question, the explanation of the trade and investment of Cambodia during the COVID-19. So there are core 4 points that need to be discussed. So the first one is slow in shipping for products. For example, during the COVID-19 emerge, uh, there were there there are some foreign consumer from the outside like demand for the local product in Cambodia to export to theirs. But however, due to the COVID-19, the product have been slow in shipping, especially in the textiles. Yes, and for another one is the cancellation for the products. Like seeing there are some slow progress or slow in shipping of the products, especially the textile to export to the foreign consumers. So some of them just cancel the consuming. So it may affect to the local producer, especially the Cambodians. Like it affects to the household income. Yes, and those who work under the factory as well. And for the third point is the investment postponement due to the pandemics. Uh, um, this of the COVID-19 can have the negative effects on the investor, foreign investor, just like the Chinese investor who are interested in to invest in Cambodia. Like it may affect into their business to go down. Yes, and the last point is the limit some of the product, and especially food. It could not come inside the country because of we prohibit some of the food. Just like a few months ago, our government bans the Indian Indian porks, if I'm not wrong. Yes, and others food as well. Yes, and for the second question, so how to boost trade and investment in Cambodia during the post COVID-19 era. So our group have discussed intensively on there are some points. So the first one is low labor cost, but have a same specialization skill. So in this sector, what we mean by that, first, like with the emergence of COVID-19, some of the foreign investor in Chinese, they try to like change their mind to invest in another country, especially in the low labor cost country, but have the same specialized skill just like in the Chinese. Yes, and another one is tech incentives. Yes, so our government can deduct some of the tax for the investor in order to promote boost our in order to boost or attract them to invest in our country. And the last one is the local production. What we mean by local production is just like, for example, currently we are planning, our government planning to produce vaccine, Sinopharm vaccine that we have by license from China. And in 2022, we are going to produce and uh, use it for local and also export to outside country. So it means that we don't have to rely on the foreign vaccine anymore, since we can produce for the local people, and we can also gain some benefit like the price from it by exporting to the developing country or those who are in need. That's that's all for our discussion.
Okay, thank you, room 2, for your discussion result. Let me invite room 3. We have Dane, Dalia, Li Hing, Vari, Muni, Kum Ho, and Sum Tay. Please.
Okay, so good evening, everyone. So we are from room 3, and regarding to the first question, our group has this came up with three focal points. The first one is the impact from the withdrawal of investor. As we know that during the COVID-19, when COVID-19 started, there's many Chinese investor has withdraw their invest and go back to their country, and we know that our main investor is Chinese, so it's impacts badly. And Also, another point is trade deficit because we have import more than export, especially on those medical supplies when we need to support on COVID patients. And another one is the decrease of trading due to closed border as we when the pandemic outspread, we have to close border to prevent the increase of the number of positive cases. So it has also impact, and this overall impact has resulted in the decrease of GDP to minus 3.1% in 2020, and the preparations after post-COVID era is that we have to increase the vaccinations result in terms of our citizen. Also, seek for more trading partner, and also we have to increase our security so our country will be investor will think that our country is safe and in terms of security, so they can have they can invest more in our country, and also to prepare more law that will favor investors, so they will be easy to it will be easier for them to invest and doing trade in our country. Another one is to establish a proper guideline for business in terms of trading, such as three do and three done that we have already implement, but we should implement more. So when the pandemic outspread again, we can still keep our business operation and also trading operation going on. Another point for the preparation is that we should attract investor by lower the tax for a specific period of time. So once they invest in our country for a long time, we will change the tax accordingly later on. And last point is the improvement of infrastructure like road and bridge, so it will be easy for transportation, which can boost trade and investment. So that's it from our group.
Okay, thank you, Daya, from room 3. Let me move to room 4. We have Sitikun, Davin, Chiumain, Visal, Sengha, and Panyalat, please.
Yes, teacher, good evening, teacher and everyone. So I'm from room 4. So for the question 1, during the pandemic, Cambodian export of garment and footwear and other investment have experienced a decline during the COVID-19 pandemic. However, we can see that the COVID-19 does not impact provide a negative impact on the Cambodian agriculture sector, but it has provided an opportunity for the agriculture sector to increase their production, to shape the demand for agricultural product in the domestic market, in the both domestic and foreign market, and also it make up for the decreasing an import from the agricultural product from the neighboring country as well. So for the for the question 2, we have 2 suggestions. So first one, in order to boost trade and investment in the post-COVID area, first one, you need to get to vaccinate your people so that the investor might have confidence that when they invest, they won't be another wave of the case that might disrupt economic activity. And second one, the government need to encourage trade and foreign direct investment by providing financial incentive, including interest free or low interest loan, or other incentive that is possible to encourage the investment flow. Basically, when the country is by allowing tax, the investor might want to invest after the pandemic, as they also lose their income in the past. That is a little the boost the trade in the country. So this is all of group 4. Thank you, Chair.
Okay, thank you, Group 4. Let's move to the last room, room 5. We have Liang An, Monirot, Sena, Tripik Rutirij, and Sunita, please.
Hello, this is from Group 5. So, for the situation during the trade and investment situation during the pandemic was kind of bad. Like the government fiscal, there are not much fiscal space for the government, and the government cannot use the money to improve the system and to attract the investor, because like the government used a lot of their saving, like was spent it on the healthcare and the medical supply to fight back the pandemic. And also there are a lot of factory were closing down because like it is hard to do the import and export, because like the border was like kind of temporary hard to get through during the time of pandemic. And also our service sector, which this the one that we are known for, like tourism sector, was like almost completely halted. So there are not much investment in the service industry as well. And for the future plan, our group think that Cambodia, as a developing country, we need to be smart and adopting the smart incentive scheme policy, that we encourage people to, understand more technology and encourage people to invest in the new technology to create job, skill training, research and development and innovation. And because like why we need to change our mindset, because those foreign investors not gonna look at developing country as an opportunity anymore, because developing country does not have the best healthcare system. So after this pandemic, they're gonna be very traumatized, and they will look instead of looking at developing country as an opportunity, they look at us as a risk. So we need to be cheap and inviting, make sure there are no corruption and stuff, and we need to be like decrease the cost for opening business in Cambodia, like rental and domestic tax, like land tax and stuff. Because it might sound like a bad policy, because there will be less money for the government because we decrease the domestic taxes. But if we score a lot of big investor, we gonna earn a lot of economic of scale and economic of experience, which is really good for us in the long term run. That's it from our group. Thank you.
Okay, thank you, room 4, room 5. So I think you all listed the key ingredient. I think it's all important thing in order to promote the recovery and economic growth again, especially the post-COVID-19. I think that's all. I like to end the meeting here, and I see you again next week. Enjoy your evening and have good time. Goodbye.
Goodbye,
Bye.
teacher.
Goodbye, Lake.
Bye.